Hi, this is Nick Jordan, co-host of the Unbox Show, where we unbox and discuss the building of things. To us, this means building businesses, high tech, low tech, Main Street, hospitality, real estate, and more, building ecosystems, building community, and building a legacy. Keep up with our adventures by subscribing to the show, following us on LinkedIn, or visiting us at unboxed.ventures. Let us know how we're doing in the comments. Hit us up with anything you'd like to hear more on, or if you have something important you'd like to share with our audience. Now, let's get on with it. Let's get better. Let's build. Enjoy the show. Well, let's get going. This is the Unbox Show. I'm Nick, and this is Eric, your co-hosts. What are we talking about today, Eric?
We want to talk about how we are building a $1 billion venture studio. So what does it all mean? Why are we doing it? Why are we doing it now? Why do we think $1 billion? Where did that number come from? And why in this area? And why does this area need it? And how can this area support it?
Sure.
That's
Well,
a
let's
lot.
start with that's a lot. Yeah, and I think as you probably heard or will hopefully hear, if I remember in the pre-show preamble, we want to aim the Unbox Show at building, right? We're building stuff. We want to hear from others who are building. That's usually what it all kind of comes back around to anyways, but we just haven't been as explicit about stating that as sort of, the expectation that, audience would want to hear and come to the show for. So cool. And this is the first one because it's our thing we're building a thing that's going to build other things. And, the startup that helps startups start up. But let's start with $1 billion. Tell me your thoughts about a billion, why, and how we get there.
Well, and to kind of even preface that, we've been building for a very long time, decades, like literally decades. And so when we kind of set a target at something, we have a lot of background to understand what it means and what it would take to get there. So a billion may be somewhat of an arbitrary big number. However, we all know that there's a concept of a status, a unicorn status, and our area has been we've had, I guess, a few, but we're behind the curve of where a lot of people thought we should have been. I moved here 20 plus years ago, and everyone's like, it's the next Silicon Valley. And, regardless of what you think about that, the reality is that it shows that we should be well beyond, just a handful of unicorns. We should have unicorns that have come up. We should have exits. We should have those entrepreneurs investing back into the community into very early stage companies. And that's what kind of creates this kind of Silicon Valley feel. We haven't had that as much as we should. And so for us, we have an opportunity to understand, we know what it takes to build stuff. We've helped a lot of entrepreneurs build stuff. We've built stuff. And so now we want to combine all that into an entity that helps lots of people build while we build. And the $1 billion kind of comes, from my perspective, out of that yearning. We got to get to that status, and we've got to demonstrate that we can create entrepreneurs and businesses that exit and then recapitalize the area.
Yeah, and I'm sure we're going to come back to this throughout the convo because it is kind of the crescendo in a lot of ways. But yeah, and who's going to get excited about saying, I can't wait to build a $50,000 a year, landscaping business? You're not going to attract capital or talent or really much of anything because that sounds like a lot of work for not a lot of reward. So kind of casting that, throwing that marker out there and saying, hey, this is what we want to reach. And we want to openly state our goals and be, not held accountable in terms of, laughed at if we miss it, but we won't. But say we're making it happen. So as we do, like, don't be surprised. But let's also, maybe back up and say, what is a venture studio? What is our area? And what are some of the problems in the ecosystem? And start to kind of weave together the, what is this and why it even came about.
Yeah, well, so I'll kind of start with what we define, or what I define at least, a venture studio, at least the way we're doing it. There are lots of different models for venture studios, but there aren't a lot of venture studios. The primary one that people kind of refer to are people who come together with maybe a team of developers, let's say, if it's mostly tech related venture studio, and they build and vet ideas internally And then the ones that kind of make it, they try to spin out in the market. And those are really hard. They take a lot of capital and a lot of patience. And, just really the big thing is, I guess, they just take a lot of capital, and they've struggled to really be successful. The ones that are successful are very successful, but they're few and far between. We have, things that we have built internally, which we'll talk about. But I would say our primary objective is to work with external partners and really get in the weeds with resources, all the resources, whether it's leadership, and consulting type expertise, whether it's development help, whether it's capital, but typically like all the things that surround an entrepreneur and an idea to help them be successful. And we take a very active role with those companies. And, we do everything we can to see more of them be successful than maybe the 1 of 10 or 2 of 10, whatever, like the, venture capital and venture studios have, I think, pretty similar, the traditional venture studios have similar metrics of we're looking for 1 out of 10 or whatever that number is. It's a very small number. Well, we think by being a partner and surrounding them with all the resources, we can really raise the bar on that and think of it more like, well, we're vetting these ideas super early. We're providing super early resources. Let's make it 7 out of 10. There's no reason it couldn't be. It's not that the ideas are all bad. So, maybe we'll kind of see what the numbers play out to be, but our goal is to see lots of these companies, be successful.
That's right. Yeah. So I'll kind of restate it in my words, which is we're investing experience, expertise, time, resources, and capital. And I think, that capital being a lot of times the last thing that happens, and then we help them scale with additional capital formation, spin out, and, go to market and scale. But so it's like a venture capital model in that you invest, if you consider all those things resources, and you hope for a return. But it's also like private equity a bit. It's also like starting up and being an entrepreneur and an operator, because we're really getting in there and getting our hands dirty and doing work. And we're finding teams and surrounding these teams with talent and whatnot. I think of the entity as the idea, not necessarily a founder or a company or an idea. I mean, it could be all three of them, but it's like, what is that value statement that you're making that this thing will provide to the world? And it might have just an idea and be IP that needs everything. It might be a founder that has the idea and it needs everything else. It might be an idea with a founder and a company, and it might be an idea, a founder, a company, maybe a few customers. You never know. It can be anywhere kind of on the spectrum. But the point is, they need a lot more than just one of this, smorgasbord of services, whether it's, fundraising or, leadership or tech or advice or consulting or advisory or this, that, or the other. I think, we want it to be all kind of one machine pushing it all, rowing in one direction for this, to see these things get to market.
Yeah. And it's the real important point there is the capital. Like a lot of entrepreneurs, they really start leaning into, I need to raise money. I need to raise money. I need to raise money. And then they raise money. And I've always kind of said, raising money is hard a lot of times. But once you have that money from an investor or a group of investors, that's when the hard work really starts. And there's a struggle there. And that's why so many companies, I don't remember the percentages, but it's a very high percentage of companies fail after raising money. And so money's got to be almost one of the back end considerations. We want to get that. We'll make sure you have a good idea. Let's validate the idea in the market. Let's do everything we can to provide that like MVP or whatever the smallest market metric is to see what direction you should head. And then once you have that a little more fine tuned, then it might be a good time to put in money or raise money or do something in that direction.
Yep. Let's talk about the aha moment or collection of moments or experiences, because it's never just one, right? But that sort of really got this thing rolling. And we'll get back to some of the tactics. I mean, I do want to talk about, okay, what does a typical kind of funnel look like and a typical investment and investment pathway? But, I think kind of our aha moment or our why, if you want to speak to that, that'd be great.
Yeah, I mean, for me, a lot of this goes back to where I started in tech. Many, in the '90s with an agency business, and we were building, internet stuff for large companies, and we decided that we wanted to build our first a product, and we weren't sure. I was very young. My business partner was a little bit older, but none of us had really kind of built a product. And we built a product that it's called Homing Pigeon. It was a precursor to MailChimp. And it was the people who used it loved it. And, we kind of leaned into a weird timing thing. We were out of Atlanta. We had the Atlanta Zoo was our biggest customer. And it was around the time the Atlanta Zoo was acquiring pandas from China, and it was just like a big story. And a lot of people said, "I just want news about the pandas." So we kind of build this permission-based thing, and I just fell in love with the idea of building stuff, and I just basically made my whole career around this idea of building stuff. And over time, I really started to do it just on my own, and I realized that it's very difficult to continue to be this kind of solo like entrepreneur. And I wasn't building stuff, but consulting with companies, with just me and my resources. And it just wasn't enough. And, we started to talk about this like 6 years ago. And I just realized that, you provide like, together, we provide you provide something that was a big missing ingredient from a lot of the consulting work I had. And just having those conversations, I mean, honestly, that was my aha moment, that it was time. It felt inevitable going back 20 years. But it just, when we started to talk about it, it became time for me.
Sure. Yeah. I think a lot to say on that. And you're right. If this had like a name to it, even 10, 15 years ago for me, I probably could have been moving in this direction earlier, but who knew, so we're building stuff. I'm building products for clients with my agency, Smashing Boxes. I had a couple of SaaS products before that. So I always knew the difference between products and agencies are sometimes lifestyle businesses and looked upon that way. So thinking about, okay, how do we evolve as an agency or as a business, or how do I evolve as an entrepreneur was always a big kind of question mark. And, I've tried, doing like, I'll just, hire myself as a client and I'll build something and I'll staff the team. And that just didn't work because there's, their incentives aren't really aligned with the startup. They're incentivized to do a project and do it on time and on budget. And whether it ever makes a sale or raises $1 or, pleases a customer, that's not their incentive because they're doing their job. They're a machine. And also I think, so struggling to find how do I kind of, use all this treasure trove of resources and experiences that I've built up over the last 10, 20 years to make the biggest impact possible. And it just more projects for more clients on a very tactical level, just that wasn't it. I mean, I knew that could grow maybe, but was that, the thing that was really going to take off and scale, mixed with the working with, I almost said dozens, it's probably been hundreds of entrepreneurs and technologists, right? Some are innovators inside of corporate or inside of research and academia over the years that have something that I think is great. I get excited about many ideas. And at the end of the day, something most times, as you know, 9 times out of 10, or probably 99 times out of 100, truly, if you think about things that don't even get started, these things don't see the light of day. Would every single one of them be determined to be successful? Like, well, no, but it'd be great to see more things come to market. And, we always talk about our ecosystem. Well, you need talent, you need funding, you need good entrepreneurs, you need this, corporate, you need just whatever, you need everything. It's an ecosystem. I'm not describing that as perfectly as I could, but it's like, well, okay, but just more of those ingredients doesn't necessarily mean that, there will be more outcomes. You still need the things that go through that ecosystem. Then when you think about it one step further, most of the time, the whole point of that ecosystem is to get, to your point, one unicorn, and then to get a second one, and then to get a third one, because those are the ones that really blow up, shine a giant spotlight on your ecosystem, your market, your area, and create wealth for a lot of people who are likely to say, I just did the entrepreneurial journey, went through that pain, and it had a great payday and a great outcome, and I had fun doing it. Let's do it again. Whether it's the original founders, founding team, or that next layer of staff, or even the layer after that, they've got money that they're more likely to redeploy. And I think we undervalue just the role of actual capital and like smart capital, because it's not easy, but getting more talent and getting this, or getting, having some universities, like you can't just like manufacture a university. It's just you either have it or you don't. But like people who are willing to invest into high risk, early stage, very nascent things, whether it's their time or money, I think is, kind of undervalued and underspoken to, because, but what we can talk about that as a separate thing. But so that was kind of how all those things came together as my, collective aha, which is the best thing I could do for the ecosystem is to actually make a great company. And the thing that I found myself best at wasn't really taking one idea and just being like, okay, that's my life for the next 5 to 10 years. It's looking at a lot of things and, really experimenting and bringing out like this broader set of experience and expertise that I've collected, and then putting the right team around it and helping see the opportunity and then taking it to the next step. So it's kind of like, what would I do if I didn't have to work, or if I just could say, hey, wipe the slate clean? What job would I take? What role would I like? Would I start this business? Would I, and buy an apartment building and be, a landlord? Like, no. I love helping people. I love working with ideas, and I love kind of getting them to market and seeing them scale and have an impact. At the end of the day, that's, I think, what it seems like a lot of things are circular. It's like, well, let's grow and scale. And then it's like, well, it's really about kind of having an impact and helping others. You want to, see your technology improve lives, or you want to see your staff, get paydays and feed families. And you want to see that your company be good stewards in the community. So, these things all work together. So kind of like what's the way you can do that the best and the most effective and have the biggest? It's to, create something that's going to grow and scale and have, a big potential for success.
Well, I mean, why do you think this area is such a good spot for something like $1 billion venture studio?
Sure. Yeah. And so this area specifically is the Raleigh-Durham, North Carolina Triangle region, in the southeast part of the United States. And this is circa 2024 as we're speaking, and not to date our episodes, because this will be timeless content, as we know. But well, we've got the 3 leading universities. One is very engineering focused. 2 are, provide a variety of life science and medical and, strong, liberal arts colleges, and Duke. So engineering is NC State. Then we have Duke University, UNC. Duke is one of the top, 5 or 10 universities in the country. UNC is in the top 10, 20, but always in the top, I think, 4 or 5, between 3 and 5 of public universities. Duke is the largest private employer in the state. UNC is the largest public employer in the state. So you've got a lot of jobs. You also have $2 billion. I don't know the number recently, but it's been between 1 point something and 2 point something billion dollars of research grant money, federal grant money that flows through the triangle through the various entities that are doing research. So you've got a strong life sciences presence. So you've got, which takes a lot of capital investment, and the ones that work, create a lot of success. You've got a couple of cool, mid-sized city downtown markets. So it's got cool factor. There's a lot, and there is a solid tech entrepreneurial ecosystem. I'd say solid because we do need more of these wins. It could be 10x the size it is now, I think. But so those are all ingredients. I think what you said earlier was like, well, the universities, the life sciences, the kind of cool cities, the quality of life concept has been here for 20 years. So why aren't we faster? I don't really know. I think you've got kind of the tech and research, and, tech is Silicon Valley, but like, there's also Boston with life sciences, and we just kind of have a lot of things that maybe aren't as like all just so like vertically aligned in their industry or field. I don't know. I'm only just guessing at that point, but those are the things that we have, which are great raw ingredients. Also, there's quality of life. The state currently is a fairly purple state, so you kind of can live here and not feel like I just committed to, a blue state, or I just committed to a red state. That matters to a lot of people. And you're close to the beach, you're close to the mountains. You're not saying, hey, I'm in Florida, I'm a hot weather person, or I'm going to live in, New York or Maine or whatever, be up Boston, and or Chicago. It's like, well, I'm a warm weather person for 7 weeks each year, and the rest I'm in a winter coat. So you get to have a little bit of seasons. Yeah, with all
Yeah.
the academia around here is smart people, good schools, but
So
yeah.
one topic, and certainly we'll have future guests on and deconstruct this a little bit, is this kind of why, when we have all the ingredients, do we seem to grow at a slower clip than than people anticipate? Always, they always anticipate fast growth, and it just kind of meanders. But one thing that, and I've talked to a number of our area investment groups, whether VCs or angel groups, and again, people will have on and really kind of ask them specifically this question and deconstruct it more. And there is a theme to it, which is there aren't a lot of resources for early stage entrepreneurs and companies. We do have some stuff which we can talk about, but in the private market, there's those investors are almost non-existent. It's really, really small. If you have an idea and you need a little bit of support around that idea, whether it's capital or otherwise, that support system is actually really, really small. It's there, but it's small. And if you need resources, just to kind of get back to a little bit of why we've taken this model. But if you need resources behind maybe a small grant, we have a couple organizations that provide some small grant funding. It's like $5,000 if you're so lucky to be selected. But there are very few that provide all the other stuff that you had mentioned earlier to help those ideas get to market. That is a consistent theme I've heard from some of the well-known venture capitalists or investors in our area. And so I look forward to talking to them more about why they say that and what their perspective is.
Yep.
A lot of it to me comes back to we haven't had enough exits in our area where a lot of the people that like the middle and upper managers who had an early, started to work there a little early, got some options, and then they were able to get liquidity from that exit. Those are the types of people that then start companies or invest into these early stage ideas, and we just haven't had enough of that. It's just not happening. So I think we're well positioned to take a leadership role in that area.
Yeah. Well, I do too. So that's why we're doing it. But so I had one almost counterpoint in a way, which is, and I'm not looking this up on the internet, nor am I a historian, but Silicon Valley, I mean, they got going like a long time ago, and I want to say it's the 70s. We just constructed RTP, which was like a kind of an early mover and a big corporate park concept, started in the 70s. So for context, they were already kind of going and inventing and doing something. We just made our first park to try to bring in innovation, but that was a different mold of innovation. It was just like big corporate headquarters and HQs. Yeah. Boston has, like, for the other kind of coastal example, is one of them. Well, New York is one of like our oldest cities and been, thriving for centuries. It feels like, right? Boston was like the first of everything, first public education, first of this. So, I mean, they've got Harvard, they've got, so some of the, and they had, so Facebook, right? I mean, they've got like a lot of things that started a lot before us. So maybe there is one small case to be made for like, maybe we are on track. We see how they're doing, they see their ingredients, and we see we've got the same. And we do have a reasonable amount of traction relative to nationally or internationally, but it did take them a long time. Then you go back to, well, why the early stage support? And it's like, well, because that's kind of the highest risk, and I mean, I don't call it lowest reward or lowest average reward. I mean, it's tough being an early stage person. That's when you have the most risk and, the most chance to fail. I mean, each time you move up in stage, it's less risk, but you're like, that's really tough. So you need people willing to take those risks with their own time, their own money. And the best way to do that is when you've got a lot of recycled money that made money from taking those risks. And then, so I'm agreeing with that fully and pointing out it's probably because the risk, who wants to do it? Like when you've got, we'll talk about the funds and whatnot, the ecosystem of that, but when you have a certain amount of money, you just can't write that many checks. You've got to kind of always bet on winners. the other part is there are organizations that provide some support, but they all have their own mission and their own function. Like, okay, I'll give you some guidance, but you got to go get your money. Or there's like some VCs where it's like, well, I'll give you money, but you have to have a business and have customers and have traction and have growing MRR. Like, well, okay. And then there's grant friendly, there are different things, but they aren't all. I think this was another, I could talk about various aha moments, but another aha, I guess, evolution or evolvement of thought is, well, but no single entity is accountable for the outcome except for the entrepreneur or so that's great that these things are out here, but what if all those support things all had accountability for one thing, which is the outcome of that company? So that's why I think the venture studio model is appealing, because it doesn't mean that you have to make it successful or bust. I think that's where we can use our experience from like the building and investment perspective, but all these resources are all moving towards the company successful. So whether you need this or this or this, we can help prioritize, provide as much of that, or go find it, source it, fund it as needed. And I think that's, yeah, go ahead.
Yeah. So I think it's important to note that there's a little bit of a timing thing. We kind of got lucky with timing to some degree. I don't see like our areas, we have all these problems with startups and everything at all. In fact, if that were the case, it might not be the best time or opportunity to start a venture studio like this. I actually think we do have good resources, but there are a couple missing ingredients, and that's where we come in. I think this is a great area. So I just want to be, very, very clear. I think we've done an amazing job around here of developing some programs, nonprofits, angel groups, and all that. But there are these missing ingredients. You go to, and a big one is just exits. No question about it. You go to Boston's a great example. They had a couple exits, and now they have like those people all started interesting companies around, like the CRM and marketing automation space. There's like 20 of those companies that are doing pretty well in the Boston area. I'm making up numbers, but there's a lot of them, because they had a couple wins in that area. And those people said, well, we can, create solutions that are even better than the ones we came from, or do unique and interesting things. Our area definitely needs that. We should get it. And I hope we help accelerate some of the ones, some of the people and builders to get to become those groups. So
yeah,
just to be clear, we do have a great area. Otherwise, I might be looking to do something a little different. In this vein, but maybe a little different than what we're doing.
Sure. Yeah, I agree. I think if we had, I have a couple adjacent thoughts, but if we had $1 billion, maybe we would just write a bunch of checks and just like not have to worry about doing a lot of the dirty work. But since we do not, personally have $1 billion wealth, or I'm just making up some large astronomical number, the best way to get there and the best way to support it, what we've come determined isn't to write the 25K, or let's be the 25K angel or the 50K angel, or be the participant in this fund or that fund, or, provide services, or just, it's like, it's got to be all of them. And that's, I think, how you kind of bring the, forces together to create, 1 + 1 = 3. And I also think that I hope more people kind of come up with ideas like venture studios. Like, no, we didn't invent the concept, but for ways to provide more support. And the third that's related is, it's kind of like the ultimate, I think, ecosystem play. Anything we do should be additive to everybody in the space that's investing, tech, entrepreneurship, because whether we're helping one group get to the next level and now they recruit talent and bring more people in, or it helps us build more of a baseline of team that's providing more jobs and creating and attracting more people to the area from a tech perspective. If we're able to use our platform and bring in capital, that's going to be more capital that's going to go into these types of companies, and our area has more capital. And if we can ultimately achieve an exit, well, that's more people that are going to turn around and start their own businesses, which will be great pipeline feeders for all of our angel groups, our funds, our service providers, et cetera. So I think it's not that I'm concerned about us feeling competitive, but it's definitely a rising tide kind of move. And anything, this is what I'm kind of, when I was asked, why are we launching, because we're just doing it. We've been doing it. It's like, well, because we want to, put a flag in the sand and say, hey, this is what we're doing. But also, like, we want to start to get the support from our network and our peers, because the better we do, it's really better for the area. We're going to see more companies get to market, be in the news, maybe reach regional, national scale, and hopefully see an exit or two, which is, I think, some of the exit or IPO market has been, economy driven a little bit, but I mean, sure. So let's get a couple of those past the finish line, but what's the next pipeline of the next 2, 4, 6, 8 that we want to see be big wins? And if our our ecosystem achieves that over the next 5 years, like we're in a materially, meaningfully different place than we are now with our startup and early stage.
Let's talk about two topics. First is you just kind of mentioned, well, we just launched, we launched, but the reality is we've been doing this for a couple of years now. And so although we've we weren't purposely like, in stealth mode or anything, we talked about it, but we just never made a big deal about it. We've never kind of talked to local publications or anything like that. So let's talk a little bit about what we've been actually doing the past few years, because we're launching, but we're launching with a whole boatload of traction.
Sure. Well, and I think it'd be interesting to kind of even go. I mean, so I've been doing this for 20 years, starting one company, and then that kind of ran its course, started another one, then kind of started another thing, and that became an agency, and then through that tried to work on various spinoffs, had a few, started a code school, took some equity in some different startups, was always open to the JV or the equity deal. That started to get that was what I kind of was I guess planting, seeding grounds for like what now became, or it didn't have a name. I wasn't doing it intentionally as any kind of thing other than, I did some angel checks, joined some funds, joined some, syndicates, joined some, rolling funds. So I'm like, all right, this is ecosystem and this will all ... lead to something greater than just Smashing Boxes as my agency, or greater than what, I was kind of doing as a, whatever. I think, that led me down the path to, so that was forever, but, then it started kind of coming more focused. So then I would be more intentional by saying, hey, when I would go out and work with a university, I'd say, yes, you can hire me, but if you have anything that's a potential opportunity for commercialization, reach out, and I'd be interested in maybe, taking the resources we have and the entrepreneurial expertise and surrounding them with surrounding a great, IP opportunity to commercialize. So I kind of start to get more intentional as I would go from doing office hours and mentorship across all startups, instead of just, helping them all, carte blanche, just with like everything I can, because that was my job to mentor them. I started to say, which of these things actually could funnel down into something that I'd want to deploy resources into or deploy capital into. And then it started to, and I mean, I think that is kind of about where some of our paths started to dovetail, where it's like, all right, what does that even mean? And is that a business? And then kind of starting to see some of the other venture studios come out and realizing like, all right, it's its own organization. It's going to have its own process, first of all, it is an organization. It does have a process. Oh, I also thought about raising a fund, right? So we even kicked that idea around, like, okay, maybe we'll do the fund, because like we have a pipeline of entrepreneurs, we have a pipeline of like resources that we can kind of connect them all with, so we can kind of provide this platform. And, we have a pipeline of investors that, if we say it's a good idea, maybe they'll believe it, right? And so, that's why not build that? And as you know, like capital in early stage is the hardest thing. So why not just jump right into that, so we can help solve one of the hardest challenges in the ecosystem? And if we can do well, then we'll play a really important role. But that is more technical, for lack of a better word, than I was interested in, because it's like spreadsheets, it's numbers, it's this, it's IRR, and you're a finance person that just kind of has some startup experience, or that you just happen to deploy into startups. So I actually like, my best skill isn't necessarily doing spreadsheets. It's probably getting in there and getting my hands dirty and just being kind of an entrepreneur. So, that's how the pieces all started to come into play and come into alignment. And so realizing, okay, it's not a fund. It's not just this kind of little here, little there, little there. It's like, there's a real organization that should go to this. It's called a venture studio, and it's a separate business. And we, need to, start to work it as such. The opportunity. So it's been opportunistic in terms of my half getting in there, where, I've just kind of always had my eyes open. I'm hearing lots of stuff. That's why, I'm just grateful for my experience with Smashing Boxes, because you just meet entrepreneurs, you meet developers, designers, you know corporate customers. So you kind of have some customers, you just hear a lot of problem statements, and you can do a lot of pattern matching. I guess the last thing, not to just take the whole time up, but is, with sort of the COVID stuff and, everyone kind of like, okay, what's the future of school or of work or of healthcare? It's like, well, what is our future? What do we want to do? You don't have to keep doing the same thing and expecting different results. We could actually do anything. I mean, when you look at really what COVID did for me is like lift up all of the like preconceived notions of like the structure of how the world works, right? Like you got to send your kids to school, you got to take them to soccer practice, then they'll go to college. It's like, we don't have to do shit. We could live anywhere. We could just do anything. And so if we just decided to like treat the world, our mindset with that amount of freedom, what would we do? And I kind of came back to, well, I like working on companies. I tried hobbies, as you know. I tried golf. I'm like, I'm gonna learn this. I'm gonna learn that. I'm gonna look at vintage cars. I'm like just gonna have all these hobbies. I hate hobbies. I can't maintain a hobby because it's not that interesting. I love solving problems, and it's usually business problems. And so I was like, well, I would probably do something in business. I'd probably use kind of my consultative brain because I have so much different experiences that I've kind of gone through and seen and witnessed through agencies, but also personal startups. And I'd want to deploy my time, resources, and capital and get upside, because I don't want to just do it as a consultant, because then you have to like still provide a deliverable and hope to get a fee. And like, I don't want to do that. I want people who really ultimately need the help and support to get to their outcome. And so if I had to start over, what would I do? It was that. So that's how it all kind of came together. Specifically, we've got an IP commercialization project with Duke, one of our, biggest and most important partners that we've, developed over the last 15 years. That started through just having a conversation with those people to say, hey, I know you think of us as this, you hire us, you pay us, but I want you to also keep me in mind for this, which is if there's a business opportunity where we can partner, I'd love to invest into that and partner with you and spin something out. So that's one. We had a client relationship that we knew was going to be more strategic than that. We knew they just needed a lot of the extra support. They had the product and service down pretty well. They were growing, but needed just lots of entrepreneurial help too, because they're kind of in a smaller market that didn't necessarily have the mentorship and all that. We decided to do a lot amount of services, convert that into equity instead of fees. And then I've invested 2 different rounds to help get them sort of recapitalized, sort of re-racked and getting on the right direction. And so that's an active company in our portfolio that's got revenue. And then we've got, this is just kind of coming from my perspective as we've sort of come together, a number of other things that we've built, launched. Some of them are sitting on the sideline, kind of, waiting for a conversation or for a customer, a lot of little prototypes. And we've got an active pipeline of people that we're talking to. But I'd say it got really much more intentional. I would hope say 4.5 years ago, right. Kind of COVID, and then sort of like allowed us to take a step back. And then we've been sort of just at it, ever since.
Yeah. And yeah, so is this the Unboxed show really focused on building? We'll certainly talk, more specifically about these companies and we have a number that are currently active. We have a number that are kind of like you said, I don't want to sitting on the sidelines, good ideas, good entrepreneurs. And then we do have a pretty substantial pipeline of opportunities, which we look at. But so there is the building side, specifically like the venture studio, what people traditionally think of as the venture studio. But we also have all these services that's really highlighted by Smashing Boxes. So you want to talk a little bit about that and how we look at that in context to the venture studio. And I'd also just say we should also look at it in terms of further broader market. So what is going on? The follow-up question is, what is Smashing Boxes is a pretty well-known entity around our area and in North Carolina and maybe even a little bit the Southeast. So maybe what's going on there as well.
Sure. Yeah. So, Smashing Boxes has always been an amazing, it's a company that designs and develops software for clients. So we're an agency. We build apps, we build web apps, we build digital products. We have experience with healthcare, blockchain, IoT. We're industry agnostic. We want to be good at the thing, not necessarily like knowing your compliance regulations or whatever. We've taken some products through the FDA funnel as well, working with a compliance partner. So we've been doing that for 15 years. So that was a big part of the fertilizer that got me to grow the venture studio, because it's, you're seeing resources, you're seeing customers, you're seeing problems, pattern matching, all that stuff. it's to me a critical ingredient of the venture building, because solving for teams and solving for early product development and just prototyping and good design are big pitfalls. I mean, it's like you can have a great idea, and if you can't communicate it visually, especially if it's supposed to be software, it's going to be tough to build any kind of momentum. If similar, and that goes from the start, that's an idea on a napkin, all the way to now I've got a product and it's in its V1.0, it's in production, and I need to stabilize and scale it. Well, then your problem is now how do I recruit and staff? So we've always sort of solved these problems for our clients, which is why it's critical for us to, I mean, it's a critical part of the venture studio because we're going to solve it for ourselves and for our venture partners. We're our studio partners. So yeah, we can build everything from sort of prototype, proof of concept, kind of design systems. We can staff teams. Through the process, we've built what will soon be called Unboxed Talent, but we have built up a talent staffing business that can source globally. So, historically, at one point, all of our people were all FTE W-2s sitting inside our office in Durham. That was fun. Great energy. That was a great time. That's a lot harder thing to do now because working remote is a big thing. People want the flexibility. Companies are recruiting everywhere. So as they've recruited everywhere, we've said, okay, we've got to be competitive. Let's recruit as, people can work hybrid. So we get together in the office as much as we can, but staff is now spread out. We have a global capability as well. So we can staff companies or projects with kind of onshore, offshore blends. That helps with cost, and cost of goods sold. And it also opens up a much wider net of people that we can recruit from, as opposed to, 25, 30, 50 mile radius, right? Who can drive in. We have also, I want that to be a big anchor of an overall platform of services, though. So, we've talked about the Unboxed platform services as a network, right? So that doesn't just include digital product development, design services. We want to grow into marketing and digital marketing. We want to grow into, rev gen operations, rev ops. We want to grow in our back office support. So as a company, we have performed those for ourselves so we can bring a lot of that experience and some resources, but we've never staffed that. Just like back office, we have a VP of finance, we have an admin, we've got HR. We can provide those as services to our startups, but that was never our business. So we don't have a pipeline of staff. So we want to grow into that and just can see the platform services grow so that we can, support our startups with as much as they need.
Yeah. And I want to talk a little bit about, so Smashing Boxes, as it existed, still exists and still will service anyone out there who has a need. And so talk a little bit about that, and then how just even having the venture studio makes Smashing Boxes an even stronger value proposition for potential clients.
Sure. Yeah. So, the truth is, not everyone needs a venture studio. They just need the thing. And, there aren't that many people or companies. I can talk the market as a whole. Agencies are a tough business because it was, companies had so much capital and they just needed to hire people that it made it almost untenable to staff a business that was just going to do agency stuff because you didn't have a big, VC check, burning a hole in your pocket. So a lot of agencies folded into, bigger companies, or they've kind of just, the business has sort of changed. So that leaves a lot of people out there saying, hey, I've got a grant, or I've got a small amount of funding, or I'm trying to spin something out, or I work at a corporation and I just need to build some software and I've got budget that need help. And where we've always thrived is when it's a little bit of a fuzzy front end, is kind of a term, where, thinking through it using our entrepreneurial DNA, helping them find the solution, it was a big part of the value. It wasn't just reading the RFP or taking the spec sheet and, product spec and then getting a quote and just being okay, we beat you on price. A lot of times we won because we added a lot of value to how the customer or client or partner thought through what they needed and how, time and space. So that still exists. There's still a lot of entrepreneurs that are early, a lot of innovators that this is not their area of expertise, that don't want to staff and build a team or go hire 4 people off of Upwork and then kind of have to manage the outcome. There's still people that need to get outcomes from their project with the budget that they have. And so because that's a need, if that just generally wasn't a need and all we, could do is or wanted to do is build companies, maybe we would, but there's just enough of a need. And that's kind of also our mission is let's kind of serve the ecosystems. Let's help see more startups come to life. So twofold. One is some of those might be pipeline for Unboxed, and vice versa. Unboxed, by building more startups, it's kind of the ultimate. We eat our own dog food, right? We're building more expertise. We're building more entrepreneurial bench. We're building a larger network of talent. So that's going to kind of come back around and help be additive to any person or project that's going to come into the Smashing Boxes ecosystem.
I mean, I think it works really well. It's just like a hand in glove type thing. Of course, I mean that's why we're doing it, and I love it. So, I mean, I think that really gives a good overview of what is Unboxed and maybe why and why now and why do we believe so strongly in it. Um, what other things do you think we should address now? I always want to leave people knowing that the Unbox show is about building, like you kind of alluded to, and we will talk to a lot of builders, a lot of ecosystem partners, and we'll get more in the weeds on what we're doing. And really, not like big on this, quite frankly, this idea of like building in public. But I think it's important from a venture studio standpoint that we talk about what's going on, very actively to the community.
Sure.
But, yeah.
Yeah. I mean, this content concept started a couple years ago as well, and it was originally called Next Matters Most. We still think that's a great brand that we want to maybe use down the line. And it was all about experience sharing. So there's so much to be gained from consuming someone else's experience, and not having it come off to you as advice or what you're supposed to do, but to hear what they've gone through and kind of like, use it for your own self. There's also a lot of value into the experience sharer to just actually talk through what they're doing, what they're building. So yeah, I think it's less about building in public, step by step versus just like, let's have experiences and share them along the way. And that's kind of what I think we want people to expect from us here. We want everything to grow in the ecosystem. So if there are, we talked about if you're kind of an EIR type, right? You're entrepreneurial, you're looking for something, you're not sure what that is, and you're not necessarily wanting to start your own company. Just get into the network. If you've got, and we've already, heard from like dozens of people from just one article, like blog post launch last week that, in our network, like, oh man, I'm the VP of marketing, or I've got a product thing, or I've got expertise in this. That's great. So whether you're an operator, like EIR type, or you've got, sort of a special skill that you'd love to add it, we want to keep building our bench. Entrepreneurs and ideas. We love hearing from you. It's a pipeline. Think of us like a VC, though. We're going to probably hear from hundreds, and not everyone's going to kind of join the studio. So we need to manage expectations there. And then if you're a capital person, an investor, a capital allocator, we want to chat because we want to know. We want both things. We want to know what you would take for you to invest into us and our companies, and likewise what you're looking for into our future companies from downstream, right? So where you're investing, if we can find something that we can nurture and bring to you, so we could be a pipeline builder for you and your kind of allocation strategy. So that's it. I mean, I think, we want anyone that's in this whole ecosystem, to reach out and let's network and let's kind of keep growing this thing together.
Yeah, I love it. And I unless you have anything else to close, I'd say, one, LinkedIn post, article, and to show how bullish, at least I am on this area, with some actual data, it led to, like you said, like dozens of inbound requests from entrepreneurs, from companies, and from a number of investors as well. So it's been great so far, and I can't wait to see what happens next. It's gonna be great.
Awesome.
All right.
Let's head on out.
Very good.
Good show, Eric.